I would share my screen and hope I'm audible.
Yes, Miraj, you're audible.
And is the screen visible?
Yes, screen invisible.
Yeah. So good evening, everyone, and good evening, all participants. So I'm Miraj from IDBI Capital, and today I will be taking you through margin and margin trading. To start with the topic, there has been a lot of chopping and changing, or a lot of new regulations on the margin front, which the SEBI and the exchanges are doing on a regular basis, and this is to safeguard the investors, or to reduce additional leverage or unnecessary leverage which was at a particular point provided by the brokers or by the participants. So those kind of steps have been taken, and we have seen that exchanges are also now getting a little bit stricter on those part also. First, let's understand what is margin. So if we say, then it is nothing but the fund you keep with the broker, or you give the broker as in collateral, be it cash or be it stocks or cash equivalent also, to execute your trade. So before your trade, a particular amount or in a percentage of the overall trade value which you keep with your broker, it can be cash or cash equivalent or shares or combination of those, done before you take a trade. Earlier, this was only liable for the futures and options market, or it was only applicable to futures and options market. But slowly and steadily, it has been brought to the cash market also. So investors, sometimes give their securities as margins also, or the stocks as margin. So if you are doing that, it is known as a collateral, and a pledge is created against your shares. So that we will understand how a pledge is created and how to do it as we move on into the presentation. But so if you can say it as collateral also or margin also. Collateral is when you give stocks, and margin is when you give cash. So margin requirements, what we have, are also decided by the SEBI and prescribed by SEBI, and it is also put into force by the brokers. Uh, what we see is that SEBI prescribes different types of margins, and then it is put in force by the exchanges. But brokers have a leeway that they may collect a minimum threshold of margins, or give a little bit leeway on margins, and treat few set of clients a little differently than all other clients. So those possibilities are there, but slowly and steadily, with the introduction of peak margin, and then now introduction which will be happening from February, where cash and stock margin combination of 50-50 is mandatory. These all will slowly steadily reduce, and this would be better for the clients, as unnecessary leverages which were given earlier. It is to safeguard investors. To safeguard investment value and investors, these all new margin rules have been slowly, steadily updated by the exchanges. Now, how do we see that it margin benefits are there? Say, for example, if you want to purchase shares of worth 1 lakh, and if you are going to purchase it with complete 1 lakh, then there would be a lesser time that you would be rolling over or rotating that money. But if you can purchase shares worth 1 lakh with a margin of 25 or 30% or 20%, that means with that same 1 lakh of amount, you can purchase shares worth 5 lakh of rupees. So that would automatically increase volumes. And once volume increases, it is beneficial for price discovery also, for the overall market participants also, and also for the participants, or the DPs, or even for the brokers. So it benefits everyone. So that is the reason margins have been an integral part of trading for a very long time. Now there are there are different kinds of margins. First is your initial trade margins, then there are additional margins also. So exchanges also use margins sometime to control the trading activity, or activity which they may feel that it has been moving towards more speculative side, and which can be a little bit risky. So they use margins also, and many other surveillance parameters to see that. And finally, these margin monies are utilized for your trade settlements. So you have, if it's in the futures and options space, settlements are done on the daily basis, and your positions are marked to market rates, and that way how the margin requirement remains stable, which we will learn going forward. So types of types of margins. So just a second, I guess. Huh. So types of margins. So basically, as I told you that, there is one minimum threshold level of margin, which is basically where or value at risk margin or initial margin at it is called. Uh, what happens is this is calculated on a statistical parameter where, it says that, at 99% confidence interval, loss within a day would be the initial margin requirement. So it covers basically 1 day's extreme movement for a particular period of time, and a particular volume is a major criteria which is taken into consideration in liquidity. So if the stock doesn't pass the threshold liquidity parameter, then additional liquidity premium is added. So then the days for which the liquidity is calculated or the loss is calculated increases to 3 days, which would generally, or very common sense thing is that, it would increase the overall margin requirement. So this is basically called as where or the initial margin. Generally on day-to-day basis, this where is reported by the exchanges. This would be the margins for to the brokers, and on those particular basis, the brokers collect the margins. So it's an automated system which is set in, where at the end of the day, depending upon the price movement, a new VAR is calculated, and then that VAR becomes the margin for the next trading day. Now, at a particular point of time, if the stock gets too volatile, or it becomes a little bit less liquid, or the parameters change where it is difficult to cover it in a 1 day, then an extreme loss margin is also incurred. So this basically acts as a second line of defense for the brokers or the exchanges, where they collect the ELM, that is the extreme loss margin, and this would be an additional margin requirement which the traders would have to keep in. And generally it is basically whenever you enter a trade, at the most point of time, you collect both the margins, that is the initial margin plus the ELM. Some brokers give a facility that they collect the initial margins and ELM whenever levied by the exchanges they collect, but this is the general practice which is followed. Now, how do you maintain the margins at a particular level? So that is the reason what I told that exchanges mark to market positions, and brokers also collect mark to market. So that is known as the mark to market margin. It is basically nothing but whatever the difference is there between your purchase price and that day's closing price is known as the mark to market. So if the prices are at below, then that much amount the client has to deposit with the broker to bring back its margin at its full effect, and the closing price becomes his purchase price for the next day's calculation of mark to market margin. So it's a rolling margin which is collected on day-to-day basis, and this helps the broker to reinitiate the margin at 100% level at the next day. So M2M are always calculated on all open positions. It is a difference between the transaction price and the closing price of the share. And then the transaction price for the next day becomes the closing price. So say for example, today my purchase price was say 100, and the stock closed at 98. Then my M2M is calculated as 2 rupees. And for the next day, my transaction price becomes 98. And if the stock again falls by 1 rupee, then by next days transaction price becomes 97. Say for example, after that the stock rises by 3 rupees, then the fourth day my transaction price goes back to 100. and the amount is credited to my account. So this is how a rolling margin is calculated on a day-to-day basis, so that they don't have to deposit the initial or the ELM margins again. Now, these all margins till now, which was the initial margin or the ELM margin or the mark-to-market margin, these all were done at end of the day calculations. What recently exchanges and SEBI did is that they came to know that at the end of the day it is done most of the time. The trades which are taken during the day gets settled there only, so the exposure does not increase, but during the day it goes up, and by the end of the day it again comes down. So the margin requirement or the margins deposited do not cash that, or they miss to cash that. That is the reason they have got something called as peak margin, which has been implemented in phases, and from September it has been 100% implemented. So we'll go through peak margin also a little bit in detail. So what is peak margin? It was recently introduced to ensure that intraday excessive risky positions are not taken. As I told you that margins which till date was calculated were the VAR margin or the ELM margin and M2M, which were majorly done on EOD basis. But it did miss the intraday trades. So for example, if I say that at the start of the trading session, if I had positions or exposure worth say 1 crore, and during the day I take an additional exposure of 50 lakhs, but by the end of the day I again reduce my exposure by 50 lakhs, so my margin requirement on the old regime would have never increased. But during the day I am at an exposure of 1,50,000. So the margin calculation used to miss that intraday trades. That is the reason these peak margins have been brought into. Okay, and to capture it more adequately. So basically, it does is what that the clearing corporations take random snapshots of all 4 snapshots during the trading sessions, and whatever is the highest margins of all those 4 snapshots would be considered as your peak margin, and then the broker or the client has to maintain that peak margin status. Now, if the brokers fail to maintain that peak margin status, then they get penalized for that, and in say in return sometimes brokers also pass on that penalties to the clients. So this is the way basically peak margin is calculated. So overall the snapshots are completely random. It is neither the broker nor the clearing corporation. It is more of an automated kind of a thing where it takes snapshots of trading positions during the 4 trading positions during the session, and whichever where the margin requirement emerges as the highest is considered as a peak margin. Now, how this peak margin was implemented? Since it was very new concept, and it would have increased the margin requirements at abrupt to avoid that sudden change and chaos, it was implemented into 4 phases. So on the first phase, it was from December 1 to February 28, 2021, where 25% of this peak margin was required on upfront. Say for example, if my 4 snapshot peak margin comes up to say 1 lakh rupee, and my margin requirement is 20%. So the peak margin upfront would be that 25% of 20,000. So 1 lakh was my trade value, peak margin, peak value. So on that 20% margin would bring 20,000 rupees, and 25% of that 20,000, so which would be around 5,000 rupees, would be the upfront peak margin which I had to deposit. Now going forward, what happens is that 50% of the upfront margin has to be deposited, which was from March 21st to May 2021. Then it from June to August 75%, and now going on from September 2021, it has been 100% of the peak margin which I have to deposit before the trades. And the other thing is that this was not only done for the futures and options market, but also for the cash market. So this created a little bit of an worry for the intraday traders, where they used to square off their positions during the day, but still they have to deposit some margin. But overall, on the phase implementation, it came to light that it was better for the exchanges, for the clients also, and for the brokers also, where exchanges or the SEBI tells have been a clear directive to brokers that you cannot fund clients' margin requirement. It is the client who has to pay money if he has to trade, and that would limit more speculative trades, and it would reduce the overall risk for the system. Now, how to calculate margin? Now, this would be, sorry, just a second. Yeah. So one of the most important question, or the question which arises in the minds of everyone, is that how do we calculate this margins, and how do we add up to the margins, or what will be my margin requirement? How much do I have to pay upfront, or how much would be my requirement later on, or M2M, what has to be done? So stock exchanges have provided many online margin calculation tools on their websites itself. NSE, BSE both have margin calculation tools on their sites. Plus, brokers also do provide it on their websites, plus on their trading platforms. Say if it's in a mobile app or on their websites, it is there. On the mobile app, before entering the trade also, it says the any upfront margin requirement would be this much. And so it has been very well and displayed, and very easily done. To understand the nitty-gritty of the calculations, if we can put it as a back to envelope calculation, generally the margins required to enter into a contract ranges between from around 20% to 30%. And since now it is 100% of the peak margin which has to be deposited, that means you have to deposit the entire 20 to 30% before putting up a trade. So if I take an F&O contract which roughly values between somewhere around, it starts minimum of 5 lakh. So 20 to 30% of 5 lakh would be around a lakh or lakh and a half, which would be required as an upfront margin to enter into the contract. But SEBI has also prescribed various norms and kinds of margins which are required. So since we have seen that the initial margins are calculated using few formulas, and plus the additional loss margin, or the ELM, it tickles in when X amount of volatility increases, or the prices of the stocks move too fastly, and if it moves within a particular bracket, the stock goes into an additional surveillance measure where the margin requirement increases, the initial as well as the ELM, that is the additional risk margin, or a loss margin, also increases. So there is a complete mechanism which has been framed with clear-cut definitions of how a stock would move into an ASM in an additional surveillance mechanism, and how that would play out, and how it will come out of additional surveillance mechanism. So it is very clear, and on a daily basis, these lists are shared for margins as well as on the exchange websites. Plus, on a weekly basis, the stocks will be there in the ESM framework or not will also be shared by the exchanges. So it's a framework which is very well constructed and very well built. It is not that it is confusing. It is just that it has been made to look a bit more confusing because of various calculation steps involved in it. Now, the margins still, at even after implementing the peak margin, brokers sometimes pay in for the ELM, which has to be paid in by the clients. So still brokers have a little bit of leeway that how much leverage they have to give it to the client. So by leverage, I mean that, generally say if the margin is 20%, so for a 1 lakh rupee of trade, if I have to pay 20,000, that means 80% leverage has been given by the brokers. So sometimes depending on the set of clients, broker gives a leverage from 80% to as low as 50% also. But if the norms have been getting very strict going further, And if the margins are not adequately met, the brokers are penalized. And going forward now, brokers have started to pass on those penalties to the clients on not fulfilling the margin requirement. Now, since I've told that, NSE also has, so if you go to the NSE's website, and if you go into the live market, there is a tab known as about margin calculator. It will give you how much margin it requires. It gives you to input your stocks, positions, and understand the margin requirement. Also, it has an overall a lengthy explanation about what kind of margins are comprised, what kind of margins are levered, what will be the VAR margin requirement for you, what will be the ELM margin requirement. It gives bifurcations, plus also on day-to-day basis, it gives that, for a particular stock, this is the percentage of VAR margin, this is the percentage for ELM, and those are given in these files. So if I can move my pointer here, if you can see, here are the files where you can see all those on the detailed basis. How to use it and how to calculate your margins, a detailed description is given here. What you need to do is you need to enter your symbol. You need to select the series it is in. So either it is in BE, EQ, or what, that is the categorizations they have made. Plus the quantity, the price, you select the positions, and then you calculate, and it will display you the overall margin figure which would be required. So this is there in the SEBI's website. It is there in the this is there in the NSE's website. I stand corrected there. And it is there in similarly in BSE's website also, and plus any brokers. Like as for our IDBI, we have our own interface where, once you log in into the trading portal, and once you put in the amount of quantity of the stock you want to buy, it will on the lower end, it will give you a pop-up that this would be the total margin requirement for you, and then you can put in your trade. So it gives you a very easy calculation. If you want to calculate also, there is a margin calculator also there. Similarly, most brokers also provide those kind of platforms. Now, how to read a daily margin statement? Now, this looking at this, it may be looking that there are many notations and many sub notations there, but it is a very simple thing and a very easy to understand margin statements which all brokers give it. And this would include basically the name of the script, the code, client code, the day at which the trade was done, the total margins that were deposited by the clients till that previous day, with breakups in terms of different types of margins you have paid. So it can be cash been given as margins, or bank guarantees, fixed deposits, or securities which you have been given, and it would give you the bifurcation of all those and then add up to the total margin available to you. And at the end of the day, it would say that, out of the total margin, how much you have utilized, how much is your balance, or if you have utilized excess, how much you need to deposit. So once margin is deposited by the client on the trade day, it will allow you to do the margin adjustments and trade accordingly, and fresh limits would be given. And once you complete your trade day, the cycle would again go repeated. So that means that trade day, once it is done, it becomes T minus one. And for the next trade day, you get again a margin statement, which would say that, this much is the balance due to be collected by the client, or the broker has an additional margin left with it. So it's a very simple statement. Let's see it in an illustrative purpose on the calculation part. So here basically it will say, funds, what you have, type of funds you have given. Say securities after haircut, or cash, which is A, then securities, bank guarantees, and other approved form of margins, which will give you a total margin which you have. Now, your total upfront margin, whatever would be applicable to buy a particular stock, would be over here. Uh, so this would be nothing but it would be total of all the different kinds of margin what you have kept here. Uh, then this will be the amount which would be required as your margin requirement, basically to be to enter the trade, or the upfront requirement. At the end of the day, you will be having some M2M, which would be a loss or a profit. So now the total requirement would be the initial total upfront plus M2M. So that will be the total requirement at the end of the day. So if this is a loss, then you need to additionally fund that. And if this M2M is a gain, that means that much would be more as a balance available to you. Now, which will be this calculation, which basically says that the overall excess or shortfall is nothing but your available margin. That is your available margin. So your available margin which you have, this, and the total requirement your would be your shortfall or excess. Then if there is a shortfall, that means you need to put in the additional margin. And once you put in the additional margin, it will give you the balance. So way of it looks that, there is a lot of things here to understand, or there is too many calculations, but it is nothing but a simple thing that, you have X amount of fund. Say, for example, your total margin available balance is say 1 lakh rupees. To enter a trade, say if I can put it here, so that totally you have 100 rupees as your margin balance. To enter a trade, you require 20 rupees. So you require 20. That means your balance is 80 right now. During the day, there was an M2M loss of another 5 rupees. That means at the end of the day, you will have another 5 rupees. So at the end of the day, you will have another 5 rupees to be made as payment. So now your balance comes down to 75. Okay. So this is basically here. So the additional margin requirement was how much? 5 rupees, which was your M2M loss. So your net balance is 75. So this is nothing but a very intuitive calculation which is done here. Though they might have shown many A, B, C, D, E is equal to A plus B plus C, then your F and G and everything. But it is nothing but a simple intuitive way to calculate a margin. That you know how much total balance you have and how much you are utilizing it. Now, how do you fulfill your margin requirements? So, margin requirements or obligations need to be fulfilled on a regular basis, or you need to do it before the trade settlement ends. Otherwise, on the next day, there are two possibilities that you might be penalized and your positions might be liquidated, or both can happen. So, how do we fulfill these margin requirements? So, the margin requirements can be fulfilled in various ways. One and the foremost and the simplest way is to deposit money with the broker, or fund the account with the amount of margin requirement, and your margin requirement would be completed. But besides that, also you can use many other avenues to complete your margin requirement. Say, for example, you have a demat account where shares are there. You can create a pledge and also complete your margin requirement. What many participants were worried is that a rule which was going to get applicable from 1st of December, or that 50% of your margin requirement has to be cash and rest 50% can be with shares or anything else. But now that has been postponed for another 2 months till February. So till now, the original system or the old system is applicable, where you can maintain 100% margin pledge, where you can pledge your securities with the brokers, and where the stock lands up into the pool account of the broker and can be utilized as a margin. But that can be only utilized as a margin. A broker can utilize only that for your account and not for any other account, which was the case few years earlier, which they have again changed, which does protect the investors. Besides shares, or what you can do is you can also fund it in other ways. Say you have bank guarantees which can be given as against their margins, plus even fixed deposits which you have can be issued in favor of the broker to create a margin pledge, or liquid funds, or can be used, or government securities or treasury bills. So any form of security, bank securities which you have can be used as a collateral. So that can be used as collateral to generate margin requirements. Also, since this peak margin has come in, stocks which where you have been given already sold in, generally the settlement happens at T plus 2 basis. But since you don't have to pay upfront margin to sell your stocks, the brokers put that into an early paying. So that stock for early paying also can be used as T plus 1 only. That is the day you have sold the stock plus 1 day can be also considered into your margin account. So that early paying stocks are also given the benefits of margin, but only for a T plus 1 day from the sale of the security without any haircut. Since that that money is with the broker, so that is the reason without any haircut that early paying stock comes in. But that is for T plus 1 day, and then after settlement, that is T plus 2, the settlement comes in and the funds come in with the broker, then that funds can be utilized as a cash margin. So that facility also has been provided by the exchanges, that your early paying shares also can be used as margins. Besides that, what we can do is also that generally we give an POA to the broker, but one should be very careful before giving any power of attorney to the broker, and should be very mindful of the activities happening. And once you give that, it gives a broker an authority to create pledges for you, so that you don't have to give instructions on a daily basis. Plus, these early payings also can be done by brokers, and you don't have to hand in a slip. We'll go through that also in subsequent slides. So what happens for the trades? These were the most common trades for traders. They used to buy at the fag end of the day and used to sell at the opening hours of the next day. It used to be called buy today, sell tomorrow kind of trades. So how does this new margin requirement or upfront payment impact the buy today, sell tomorrow trades also? Now, since both the trades are being done at two different times, this will attract additional margin also. That means to buy today, you have to pay the upfront margin. But since the shares are not sold in the same settlement, it is sold in the next settlement. And since you don't have shares to make an early pay, to sell also you need to have an additional margin, which is called client unpaid security account. So that kind of a margin would be required. You have to pay two margins in these kind of trades. And to avoid the two margins, an unpaid securities account is created by the broker, where broker funds that position, or generally reports the position only, that posts those buys and sell only after the trades have got settled. That is the T plus 2 settlement happens. So these kind of things are there, where such kind of trades have got impacted because of this. But this also has an benefit, is that it saves investors from the risk of adverse events also. So there are certain benefits, there are certain we can say shortcomings also of those peak margins, but overall the benefits generally outweigh those kind of risks. So it is better. And plus brokers have taken out an option out of it, where they have been given to create a client unpaid security account, which we call as CUSA. And this basically delivers the shares on T plus 3 basis and pays in for the sale trade on T plus 1 day. So that way on T plus 1 account is settled under the CUSA, while as the payment is delivered of the shares to the brokers on T plus 3 basis. So this takes care of such kind of problems also, which basically arise out of the peak margin rules which have been implemented. Now, what is a margin pledge? As I told you that you can create a stock pledge also, uh, stock pledge also for lending your stocks as in collateral. So from August 20, sorry, from August 2020, securities are accepted by the stockbrokers in the form of margin pledge. Now, a margin pledge instruction has to be given to the broker a day before the trading has to be done, and then those margins are moved to the pledge account. However, if you give an POA to the broker, that is power of attorney, it can be done by a broker also. Now, creating a pledge by your own, it can be done through an physical form or through an e-form or to the electronic format. And through electronic format, as it was earlier also told by Marlon, that Speedy is the platform which you can use, which provides a seamless e-margin creation facility also. Sorry, pledge facility also. Now, these are specifically, once you create a pledge, it is created specifically in an demat account, which is created by the brokers for such kind of pledges, which is generally known as the client securities margin pledge account. Uh, that is which is created by the brokers and where the shares lie in for your margin. Uh, Now, how do you submit this? So, as I told, it can be done through a physical form. There is form 43 which needs to be filled in and submitted to your DP, and then your DP proceeds this instruction and moves your shares to the margin account. And generally, if you are doing it through the physical format, it needs to be done a day prior so that you get the margins before you do your trade. And to speed up this platform to process and do it electronically, pledge instruction electronic can be done using the NSDL's Speedy platform, where you can register and through a password or an e-token you can do that. And there is a link available here. It is also available on the NSDL's website. If you wish, you can take a photo of this particular thing uh, to enable that services also. Once you create this pledge instructions and confirmation message or a confirmation link is set to the pledgee, and if he confirms, then the pledge is created. And if a power of attorney is given to the broker, it gets opt for an automatic confirmation. It directly creates a confirmation, and it can be effectively immediate. Now, things to take care in creating a pledge is that the securities which are approved by a stockbroker only can be utilized for margin purposes. So there is a list of approved securities which can be utilized for margin purposes. So only those stocks can be utilized. Other stocks before besides that will not be utilized. And also you won't get the 100% value of that stock as margin. There would be an haircut leeway, and haircut would depend upon the value of the security, and according to the grades of the security, haircuts are there. So the applicable haircuts will be done there. By haircut, I mean, say for example, if you have a stock worth 1 lakh and that has a 20% haircut, so your margin which you will get would be only 80,000. 20,000 would be done as a haircut, and that haircut percentage depends and varies. Now, once this is done, and if you don't want to do these kind of things on a continuous basis, on a daily basis, you can give an power of attorney in the broker's favor, that he can do margin pledge instructions on your behalf, which will speed up the process. But in that case, if you do give a power of attorney, whenever the broker does a pledge, it will give you a confirmation link, and it will be sent to your mobile number and registered email ID, and you need to enter that OTP to confirm the link. Or else you can again use the Speedy platform also to do the same. So that way there is a two-factor authentication done. It is not that broker can do it on its own. Now, how that margin pledge confirmation is done. So once you receive a confirmation link, so once your broker enters the margin pledge instruction, and that link is received on the registered email address and on the mobile number, registered mobile number. So you need to open that link, authenticate with your PAN number. So once you enter your PAN number, it will give you an OTP on your mobile number and on your registered email address. So you need to enter that OTP into it, and you need to do submit it. And once you submit it and confirm the pledge, the verification is displayed on the site, and it is also displayed to the broker, and your pledge is created. So even if you give an power of attorney to the broker to create a pledge, what at max he can do is generate a link for you and send the link to you. Then later on, you need to authenticate it and enter the OTP to confirm the link. So this is the way, there is a two-factor authentication, so that there cannot be misuse of POAs. So that's all on the margin front, Marlon. Now we should move forward to the Q&A.
Thank you, Miraj, for this wonderful presentation. Various, the margin requirements and
So, participants, if there are any questions, please do mention that in the chat box. So Pankaj, your question was, can you share the PPT along with audio clip? Sir, you can get the PPT on our NSL website. So under education tab, there is presentations available under NSDL. So you can go ahead and download it for your reference. Regarding the audio clip, that is not possible, sir. But definitely we keep on conducting such topics in the near future. So you can go and attend once again. So participants, please do mention that in the any questions in the chat box so that we can go ahead and take it forward. Also, just a small reminder to all our participants. How did you like our webinar? Please do go and give your feedback about this webinar. I'll share you the link once again. So please do go and give your feedback so that any topic, any suggestion that you would like NSDL to take it. We would definitely like to hear from you. So please do go and give your feedback at the link which I'll be mentioning in the chat box. So this is the link which I have sent it in the chat box. Also, since we are celebrating the 75th year of independence, so SEBI has termed this as the Azadi Ka Amrit Mahotsav, the year of Azadi Ka Amrit Mahotsav, in which SEBI and NISM is conducting, various quiz and competitions. So for those between the below 18 years, 18 to 30 years, they can, basically subscribe for the quiz competition. All the participants will be getting a participation certificate, and there are special prizes to be given for the winners. Also, people who are above 30 years, please don't get disappointed, because we have essay competitions for you as well. So, you can participate. I have shared you the link in my chat box, so you can go ahead and visit the link and register for this competition. So it's a initiative by SEBI and NISM, so you can avail of this opportunity as well. So this is the link which I have shared in the chat box for participants. Thank you, Kailash, for your feedback. From Vaishali, we have a question. Haircut, what is the use of retail trader? So Miraj, if you can just take it.
Yes. So haircut is like when you give your shares for, or you create a pledge with your broker. Generally, brokers would take an haircut on the entire value. So that much amount you would be getting less as a margin. This haircut is basically done so that, in an individual, because these are securities and their price also fluctuate in the market, and to safeguard the interest of brokers and see that none of the parties are at disadvantage, these kind of haircuts have been prescribed by SEBI to the exchanges and exchanges to the broker. So that is basically the use of haircut. It is not that retails will get haircut. It is basically whenever you create a pledge through securities. Say for example, if you have given certain shares as a pledge for margin, and the amount for those shares total up to 1 lakh rupee, and an average haircut, for example, if we say comes out to 25%, so the margin which you will get to utilize out of that 1 lakh share would be 75,000 rupees. So that means a 25% of haircut has been done on your overall shares.
Okay, thank you, Miraj. We have one more question for you. How can we get the list of shares which can be pledged as margin?
Those shares would be available on the exchanges website on NSE and BSE under the equity tab. And also, if you request your broker, he would be able to share the list because it is updated to the brokers and on the exchanges website on regular basis. The frequency, I guess, on daily basis. So that would be available very easily on the NSE as well as the BSE website.
Thank you so much. Rajesh, you have mentioned uh, request to plan and conduct session in practical mode of trading. So Rajesh, if you can just mention that in the in your in feedback, you can submit your feedback online. So we can just look at it and how on different topics we can think of it and take it for our near future. So thank you so much for your feedback once again. And we have one more question from from one person. Can we pledge and unpledge share in one day? This is from
Yes,
Sanjay.
you can do, you can pledge it in a day, but generally if you are using the electronic format, it takes some time to authenticate the pledge. Generally, people don't pledge it and unpledge in a day because if you will be pledging the shares and then taking a position, that means your margin is utilized. If you square it off, the margin generally gets free on T+1 basis. That is the very next day after the settlement. So on the same day, pledge and unpledge generally does not happen. But if you wish to do, you can do it. Say you have pledged the shares initially to take the trade position, and by end of the day, if you can, before the day, you can push in the cash margin and you want to unpledge your shares, it is possible. Since if it is an electronic format which you are doing, if you are doing the physical format through Form 43, then it won't be possible.
So Sanjay has asked another question. What is the time required for pledge and unpledged shares? So is there any specific time for doing this?
It is not a specific time, but generally in the first half is what it is advisable to do it if you want to do a trade in that particular day. Since it might take some time for the pledge to get created and the margins to be credited. So it is not that you cannot do it at the you need to do it before 10 or before 12 or before a particular time. But yes, since exchanges on the peak margin take 4 random shots, uh, where they might not, the broker also might not don't know the timings and when the peak margin would be calculated. It is generally preferred to be done in the first half to be a little bit better and avoid penalties.
Okay. So, Pankaj has just suggested, can we, I will have to attend the webinar once again. I request you to please arrange webinar on margin trading for beginners. So, Pankaj, so we have margin requirements and margin trading in on 28th of January at 5:30 again, and we have Mr. Miraj Vor itself who would be explaining in detail once again. So, which is in Hindi. So if you haven't understood today, maybe you can register for 28th Jan and uh, get to know more of it. So we have a question from Mr. Kailash. Even if I had balance, but brokers debiting regular basis on margin pledge. So I'm not really sure about this question. I'll just
Kailash, I'm not sure what is it that he's charging you to unpledged shares or what?
so Kailash, if you can just unmute and ask your question, please.
Yes, yes, sir. Yes, sir. They are debiting the on regular basis without. I am having the balance, but they are debiting money.
No, Kailash, I wanted to understand if you are pledging shares, so they are charging you to pledge shares, or it is that for to unpledged shares they are charging you. So I'm not able to get the question clearly. If you can just elaborate a little bit on it.
Sir, even if I am having the balance,
Mhm.
then I don't have any margin, means no need for margin, but they are for purchasing
कैलाश
the
जी,
share.
यदि आप हिंदी में भी पूछोगे तो भी कोई दिक्कत नहीं है.
नहीं सर, वो एक्चुअली क्या है, वो मेरे अकाउंट से डेबिट कर रहे हैं ऑन दी मार्जिन बेसिस पे, 25 रुपीज प्लस समथिंग दे आर डेबिटिंग.
ये पेनल दो चीजें हो सकती है कैलाश जी इसमें. एक तो है कि आपके अकाउंट पे वो लोग प्लेज और अनप्लेज करने के चार्जेस ले सकते हैं, या तो दूसरा हो सकता है कि वो पेनल्टी जो एक्सचेंज उन्हें लगा रही है वो आपको डेबिट कर रहे हैं. तो एक तो पहले आप आपके ब्रोकर से वो क्लियर कर लीजिए कि ये जो पैसा आप डिडक्ट कर रहे हो वो किस चीज का कर रहे हो. हाँ, दूसरा आप उनको पूछ सकते हो, क्योंकि प्लेज क्रिएट करना और अनप्लेज करने के लिए अधिकतम ब्रोकर्स कोई चार्ज नहीं लेते हैं, पर ये ब्रोकर के डिस्क्रिशन पे होता है. तो वो आपको उनसे उसके लिए बात करनी होगी. जनरली क्योंकि अभी कैश में भी यदि आप खरीदते हो, पहले क्या था कि मार्जिन सिर्फ फ्यूचर्स एंड ऑप्शंस के लिए लगते थे, पर अभी कैश में भी अपफ्रंट पेमेंट देना पड़ता है जब से पीक मार्जिन का नया नियम आया है तब से. तो यदि आपका अपफ्रंट मार्जिन या शॉर्टफॉल होता रहेगा, और यदि आप इंट्राडे ट्रेड करते हो तो आपका पीक मार्जिन इंट्राडे ट्रेड्स भी कैलकुलेट करता है, तो उसकी पेनल्टी भी हो सकती है. तो सबसे पहले ये क्लियर करवा लीजिए उनसे कि ये आप जो चार्ज कर रहे हो वो किस चीज का कर रहे हो.
नहीं सर, ऑन कैश बेसिस आई एम परचेजिंग द शेयर्स, देन व्हाई दे आर चार्जिंग द दिस मार्जिन? आई डोंट वांट
आप
एनी मार्जिन.
आप परचेज करते हो, उसके बाद में पूरा पैसा देते हो. तो वो जो पहले का सिस्टम था, अब वो सिस्टम नहीं है. पीक मार्जिन में आपको 20% या 25% जो भी आपका पीक मार्जिन अमाउंट आता है, वो शेयर्स परचेज करने से पहले ब्रोकर को जमा कराना पड़ता है, और उसके बाद शेयर परचेज कर सकते हो.
वो
और
तो रहता
यदि
ही है
वो
सर, वो तो बैलेंस रहता ही है सर.
तो वो प्लेज का शायद आपसे चार्ज लेते रहेंगे, तो वो आपको उनसे क्लियर करके कट करवाना पड़ेगा.
ठीक है सर, ठीक है, ओके सर.
We have one more question. Recently, they had changed circuits in few stocks. Where can we find that list of stocks?
That list comes up on the NSE's website and BSE's website. On equity tab, there is circuit filters or list of revised circuit filters Excel sheet available, which you can download, where revised stocks with circuit filters are available. So I exactly would not be able to tell you a pinpoint path, but if you go to the NSE's website, in the old website, it is under equities tab. If you go to products and equities, in that you would be able to find it. Or if you can use the NSE's search option also, you will get it very easily.
Thank you so much. So Pankaj has just recommended being an investor since 2008. Can you recommend a suitable training session of NSDL? Pankaj, sir, basically, every session is a learning session, and which is suitable for investors like you. So I would suggest, if you want to gain more knowledge, please do attend all our sessions. In fact, every week we have sessions on different topics. You can get the list of such topics on the NSL website. So you can go. I'll just send you the link itself. So all our participants can go and register for any of the topics that they would like to attend. And recommendation is, there is no specific recommendation, because it's just the every topic is as useful as and interesting for all our investors. So you can go and attend any of our sessions. So this is a link where you can find, I have mentioned in the chat box, this is a link where you can find details, uh, wherein you can go and register for yourself. We have, till 28th of January, our forthcoming webinars. So you can go and attend for it. Any more questions, participants? Please do mention that in the chat box, and we'll be happy to take it forward. Sanjay has asked, any certificate program you have. Sanjay sir, we at NSL, we don't have any certificate type programs. In case if you want to gain knowledge and get certificates, basically NAC conducts certification, uh, wherein where they have different modules, wherein once you pass those modules, you can gain certificates as well. So you get certificates from NAC. So NISM has certification modules. So, but for conducting webinars, we do not give at present any certificates. So participants, any more questions? Else we can close the session. Santosh has asked, do you help us to select share for investment? Santosh, sir, we at NSDL, we do not, recommend any shares as a precautionary measure. What we would suggest is, please do, read before investing. Read all the terms and conditions. Read what the company is all into. Is it the company, giving you good? Is the company's cash flow statements, balance sheets are in proper condition? So there is no specific recommendation. Miraj, you would like to add anything on this?
Um, uh, on the specific investment recommendation, I guess this would not be a appropriate forum to do that.
Correct,
But
correct.
yes, if Santoshji, you want, there are better ways, other than taking someone else's recommendation. I would suggest you start reading about the companies and know more about the companies, as wide materials are now available on the internet. Once you get convinced, it would be a much better way to start investments than looking for some tips. Yes, if you need certain help on a particular those places, then there are many brokers such as we are at IDBI, or there are n number of brokers who can assist you into knowing more about the company, or who can guide you. But it would be always better to have the study at your end first, and then go forward and look into it.
So much. Pushkin, you have asked, would there be any webinars on future and options? Pushkin, just recommend it if you can, give your feedback in the link that has been mentioned. We can just have a look on that, and if possible, we can, take such topics in our near future. So please do go and give your feedback in the link that has been mentioned, and it would really help us as well. Santosh has asked, do you offer any courses on market analysis? Sir, right now at NSZ we do not offer any courses. As I informed earlier, we do keep on conducting such webinars on different topics. So it will help our investors to gain more knowledge and invest in a better manner. So please do go and register for any such topics. The list that I have mentioned, the link I have mentioned in the chat box, please do go and register for it. Participants, thank you so much for coming here and participating in this webinar on margin requirements and margin trading. Pankaj has asked, can you advise to ascertain the reasonable value of share? Miraj, you would like to take this?
Yeah, so on a reasonable value for a share on the margin front, if you particularly say, then those are defined by the exchanges, that how much value of margin would be given for a particular share. And if you are asking more on the actual price value of the share, then there are various ways to ascertain a reasonable value for shares. So I think it was more related to margins. Then it is always, the value what we will be getting is the value of shares less the prescribed haircut.
Okay. So thank you so much. Sanjay has asked, can we pledge SGB for margin, sovereign gold bond for margin?
Yes, sovereign gold bonds are accepted as margins. They are so there are two ways to do it. Generally, you can get a bank guarantee by giving the sovereign gold bonds from the bank, and that bank guarantee can be utilized. Or directly, those if they are in the e format, can be submitted to the brokers for margin. So it can be utilized as a pledge.
Okay, thank you so much. Thank you, Miraj, once again Okay, so Sanjay has asked, and we get loan on SGB also. Can we get loan on SGB also?
Yes, you can get. That's what I told you, that if you provide those sovereign gold bonds to the banks, you can get bank guarantees from there, or a credit limit kind of a thing is extended by the banks. So that would extend as a loan. It is not that actual loan kind of a thing, but you get a CC limit on those SGBs.
So thank you so much, Miraj, for your time with us, with NSDL, and sharing your meaningful insights on the topic, very interesting topic, which was on margin requirements and margin trading. I'm sure that all our participants have gained knowledge on this topic. In fact, same topic we would be covering up in Hindi on 28th of Jan. So, anyone who was not comfortable in English, they can attend the Hindi language, which is on 28th of Jan. So please do go and register for it as well. And thank you so much once again, Miraj. Thank you, participants, for coming here. If you have any questions, you can always email it to us at relations@nsl.co.in. This is the email ID. Other than this topic, if you have any questions, any doubts, please do email it to us and we'll get back to you on this. So thank you
Yeah.
once again, Miraj.
Yeah, thank you, Marlon, and thank you all for attending it. Hope it was a little bit of value addition to the knowledge you might have gained through this session. And thank you, Marlon, once again for providing this opportunity. And thank you, NSDL, also, where I could conduct and share this knowledge and session with everyone.
Thank you so much. Thank you, participants. We come to an end of our webinar. Thank you so much.